Good morning, ladies and gentlemen. As always, let's start with the 10-year yields. We are still within that compression and we are now ready to start breaking out of it. Since we think it's going to be a substantial risk-off period over the course of next week or so, the likelihood is that we break lower and test this uptrend line around the 215 level in yields. We would very much welcome that. We are going to be buying the straddle for around 2 points on Monday. We think that we will see both the downside tests and the upside tests by the end of the first quarter of next year, and therefore we think that volatility around the 2 points, we've been very patient waiting for it, is a very good investment to be cut out here and then waiting for the move back up. But in any case, this very tight range seems to be creating a head and shoulders indicating that we'll go back towards the 2 to 215 area of yield in the 10-year note. European yields, and this is a weekly chart of the Bund, indicate that we are now opening up the Bollinger Bands and we are likely to go and test over the course of the next 2 or 3 weeks all the way back down to around 14-15 basis points. This is going to be a major move for that market. We are talking in percentage terms, a very large move in the Bund, and that certainly is commensurate with a period of risk off over the course of the next 2 or 3 weeks. We have been following the behavior of volatility very closely. It is exceedingly important, and we think that the fact that they've tried to sell it so hard all of last week and the market went to test the new highs in equities, but they failed to break the trend line in volatility and make it close lower, indicates that we will have over the course of the next couple of weeks a test of the very important 1627 level. It is much more likely now to spike than it is to continue to drift lower into the tens. Basically what the market has done is retrace 0.618 of the first leg, and now it could have a significant spike higher over the course of the next couple of weeks. Volatility here is a very good risk reward long because the stops are so tight compared to the upside. It's probably a 4 to 5 to 1 risk reward ratio, which we definitely will take. Let us start examining each time frame for the INX, which is basically the SPX. We were waiting for this close below 2580 level, which we got. If you remember, we tweeted that it was very important that we close below 2580. The market had momentum, it had a chance to break higher, it had a chance to go to all-time highs and close Friday there. We had a low volume day, we could have done it. No, the market fell back and basically closed with a completely indecisive pattern candle on the weeklies, but crucially below a very important weekly trend line. When this kind of failure happens, what happens is that we go and we test the middle line. That is around 2505. So what we would expect to see after this kind of behavior is a move into the 2550s, where these supports are, hesitation followed by an ABC back down towards the 2505, 2510 area, within the next couple of weeks. And that is on the weeklies. Now let us look at it in shorter period time frames. Here we have an enlargement of the dailies. We are breaking below the very important moving averages. First test is going to be the bottom of the Bollinger Band, 25.57, which in futures terms is around 25.55. We would expect that to happen very quickly next week, say by Tuesday or Wednesday. Then a period of consolidation followed by a move back down towards this level, the 100-day moving average, after breaking the 50-day moving average, around which will be around the 25.05. So over the course of the next couple of weeks, we see both the dailies and the weeklies telling you that we will stop around the 2550s, consolidate a bit, and then another sharp break towards the 2505, 2510 level. The RSIs and the stochastics both confirming failing to make new high levels with the market, and therefore confirming that we are in a period of downdraft. As we move into the hourlies, we see that we are at great danger of breaking the 200 period moving average. This rally is very mature, and the RSIs are keep on making new low, less highs, so therefore obvious divergence. We should revisit the place of the divergence, which is here, and therefore that is around the 2547 level in INX, 2545 in the ES futures contract. We think that is going to happen sometime by midweek next week. Going out into the monthlies, because we think this is going to be a crucial period, we find the very important moving average, which we nearly always tag each and every month. It's very rare that we don't tag it, and if we don't tag it one month, we certainly tag it the next. It's at 25.36. We certainly plan on being flat when the market gets down to 25.37. We still think it goes and fills certain gaps back down to at least 25.05. But the most important thing will be, does it close the month above 25.36 or below 25.36? If we start closing the month below 25.36, we think then we will be in a position to call actually for the top of the entire move. Far too early to tell, and therefore 25.36 is going to be a monthly pivot point, but we certainly think that this month we see 25.36 trade in the ES contract. If you remember, last week we told you that all the components were dropping and giving up, but the only one that was not, and therefore the market could not drop without, was XLK. We think XLK has now shot its bolt. If we enlarge this slightly, we will see what XLK did. XLK tested the bottom of the Bollinger Bands, went up, tried to close the gap, failed, and gave up completely on Friday, basically getting out of all the gains it made the day before. To us, that is the first bearish pattern that we've had in XLK, and we think now XLK definitely goes and tests this area between 62.40 and 62.80, i.e. making a lower low, which will be the first time in many months. So XLK excuse me, is now ready to drop, and therefore we are ready to see at least 2% lower levels in the ES. If we zoom out on XLK, we will see that there is this gap here to around 61.20, 61.25. We would not be surprised to have a sharp move into that gap and they fill. What happens there will then be extremely important, and that will match up with that level around the 2530s in ES, which will be the critical close above or below on the monthly basis. We still think it's likely to be above, and therefore we want to be flat when he gets there, but we certainly have a period where we could have a rapid cascade in XLK down to that 6128 area, and then we see a newish chart for you. This is the percentage of stocks trading below the 200-day above or below the 200-day moving average in the S&P, in the S&P 500. We can see that actually this whole rally for the past best part of a year has taken place with declining amount of stocks above their 200-day moving average. Nothing we don't know. Breadth has been very poor, and it has been a very small amount of stocks, basically the FANGs and other XLK components, which have been making the indices go to new highs. Well, now if XLK is ready, we will have a very rapid fall between this line could go all the way to the 50% line, which is the dividing line between a bull and a bear market. The dividing line has been very important. As you can see, it actually determined when the new phase of the bull market started and always supported it since the beginning of 2016, when the last phase of the bull market started. The market has always been above 50. Well, now we think we go and retest that 250 level, which is 50% of the stocks in the S&P 500. It will be a quick ride, and therefore we think the falls in the ES are going to be quick. They're going to be concentrated in 1 or 2 days, and therefore probably options is the best way to play it. Being long puts is the way we want to play this as of Monday. Why do we say that this is going to be only a leg? Well, because all the charts are still very much in risk on mode. XLP, XLY, absolutely nothing telling us that the market is about to fundamentally change its trend. That could happen over the next couple of weeks as we move lower by 2 or 3% is that we go and retest this line. What happens there is going to be critical, and that matches up with what we were saying about the monthly chart around that 25-35 area. We think we see it, but what happens there is going to be very important. There, the risk reward is certainly not to be short 25-35, and therefore we think that this move is going to be matched with a move in XLP, XLY to about this area. SPY TLT, the other big risk on, risk off indicator, still very much near the highs, still very much it is a risk on market. It's interesting that it's not very far away from the beginning of the year, and certainly not very far away from this level which happened in March. Therefore, TLT is quite clearly now keeping up with SPY. So what we think is going to happen is we're going to have a quick break to about these levels, but that will still indicate that we are in a long-term bull market. This all coincides and basically says the market is tired, the market needs a washout. 25-35, maybe slightly lower, but by the end of the month it will probably be above 25-35 again. Another very interesting risk on risk off indicator, which is the SOX index, the semiconductor index against the yen, has shown another failure at this level and is now headed probably sharply lower, but still within a very much an uptrend. We think it'll probably fall back down towards the 180 level, but that is still going to be very much within a long-term uptrend, and therefore that is an indicator of a 2 to 3% move in XLK, probably rather brutal, and which will allow the overall indices to fall by at least 2%. So we're looking exactly for a at least a 2% move down in ES, and possibly a 3 to 3.5% move down in NQ. This is a daily chart of NQ, and as you can see, it is still far more bullish than the chart of ES. What we think is going to likely happen here is that we are going to first of all test this level probably Monday, Tuesday around the 62.50 area, consolidate a bit, and then come down towards this level, which is going to be around the 61.25 area. So a quick ABC, wash out all the overbought conditions, and then we will see what happens. But we will definitely be gunning for this 61.25 area, but we're going to be very quick to be at least square once we reach it, if not long, for possibly another move back up to 62.50 at the very least. So 61.50, if we see it, we definitely want 61.50 to 61.30. We definitely want to be out of any shorts, because by then that should coincide with XLK having filled the gap. It will be in a position to squeeze higher. And finally, our preferred time frame, which is 5 hours for the ES. If we look and actually zoom into this area, which is very interesting, it is the one that we tweeted to you earlier. You will see that the market could not stay above all these moving averages, and actually then in the last few minutes of the day it fell 5 points on nothing. We like when markets do things on nothing. It indicates the positioning in the market. The market is now ready, we think, to retest, probably already on Monday and Tuesday, these levels, 25.62. It's going to be a very quick move, few days around here, and then back down and retesting, as we said, that 25.35 area. Could all be quite quick. Certainly shorts immediately from the off, if we can get anything better than 25.78 or 25.80, looking for the very low 60s. That's going to be the first move of the week. If we look at the European markets, they certainly confirm that view. We've had the first wave, which has been a very nice 5-wave down. We've done a bit of an ABC up. We are turning the moving averages, and we are giving up points very quickly. We just cannot sustain any move above any short-term moving average. This to us indicates that early next week we'll definitely have a move to 12,700 in the DAX, and that is probably going to be the first move on Monday all the way down to 12,700, indicating that the S&P will be under pressure from the very first minute of next week. Very much the same pattern as the DAX and the Nikkei. We did our correction down, we corrected upwards to the moving averages, complete failure on Friday, closed below all of them. Chances are that we test at least 21,800, and later on in the week probably 21,293. That would be certainly a level below which you would not want to be short. You would want to have covered all your positions by 21,293, i.e. 21,300. The yen, and this is yen futures, so if prices go up, the yen is strengthening and the dollar is weakening, has made a very nice rounded bottom, and now it's on its way sometime next week to trade to at least this area, which has found it so hard to maintain, which is around the 90.75 to 91 area. We think it gets there, and that is what actually pushes the market lower. Lack of yen liquidity pushes the market lower in towards the 25.35 area, as we mentioned. But that what happens there is going to be absolutely critical, and that why we do not want to be short below 25.35 for any length of time. The biases for next week, very much we want to be longer volatility in both European and US markets in fixed income, and now we should have this increase in volatility in the equities, targeting at least 25.50 on the downside, so giving us at least 25 to 30 points immediately at the start of next week. We are looking for 61.50 to 61.75 as the ultimate target in NQ. Below there, we definitely don't want to be short. There is definitely a rotation going into Russell. Do not short Russell. These are the two to short, ES and NQ. We are buyers of volatility. We don't have a problem with that. European equities at the moment are actually weaker, slightly weaker because of the dollar, but they're doing nothing in terms of spread dollar hedged. So there is no reason to think that super cycle is anything but correcting slightly, and actually this will be a great opportunity to get into that super cycle, which is long emerging markets and just to a lesser extent EU stocks out of expensive US, apart from XLK, basically the butterfly. And this might be a very good time when the XLK has corrected to put it on. We shall definitely keep you abreast and tweet you when we put it on next week. Thank you.